Welcome to Turning Hard Times into Good Times. I'm your host, Jay Taylor. It is February 19th, Thursday, 2026, and I'm really happy to have Andy Schectman with me for the first time. Andy, of course, is the president and founder, CEO, founder, whatever, chief cook and bottle washer, everything. Started from scratch, very humble beginning, but doing extremely well now, thank God, because he deserves it. He's been a person who I think is a very highly regarded in the industry, and I think no better endorsement than than Adam Taggart's recent. Well, he has him now on as his regular precious metals guy on Thoughtful Money, and I would strongly advise any of you who know Adam Taggart, know of his show, you should certainly watch Andy when he's on. I think almost once a month, and in any event, yeah, just be sure you keep up with Andy, and I'm really glad he could join me. Thanks so much for taking the time. I know you're extremely busy now, Andy, so thank you for.
Don't be silly, Jay. You mentioned humble beginnings, and they were. We started 36 years ago in an office the size of a closet before the internet on a loan from my dad's friend, whose middle name is Franklin. My dad's middle name is Miles. But you talk of humble beginnings. It's also an honor to be here. I mean, I remember reading your stuff a long time ago when people, read newsletters all the time.
Well,
I
that's
get
all.
much more out of reading than I do out of watching videos. I read nonstop, and
Mhm.
I do watch videos too. But
Yeah.
for my limited time to gather information, I read an awful lot. And I remember reading you way back when, and
Yeah.
it's nice to be here. It's some of us who have been around for a long time. I've been doing this for 36 years, and
Yeah.
I don't know how long you have, but I know that you're one of the old school guys too. And I always relish the times that I get to chat with people like you. So thanks for having me here.
Well,
Appreciate it.
thank you. Thank you, Andy. 1981, October 1981, I had a college professor in 1967 who was convinced that he was a history professor, who was convinced that when nations debase their currency, the work ethic declines and the moral standing of the nation as a whole declines. And I think we have seen that happen in spades, I would say, Andy, in every which way. But I want to ask you, one of the things you mentioned on Adam's recent show was, one of the reasons you said that we've seen this explosion in gold and silver prices is because we haven't had price discovery for so many years. And of course, that's what the gold antitrust action guys have been talking about for years and years. Um, how do you think, first of all, who do you think, how has suppression taken place? Who's responsible for it? Why has it taken place for so many years? And now the lid seems to have come off. Prices are starting to rise, and some people think much higher levels than where they are now. But what's your best guess in terms of what the mechanics were that have kept price discovery undercover for so long?
Absolutely. Real quick, going all the way back to the beginning, you can look at Alan Greenspan, who I think in 1990 or 91, 92, 93, somewhere in that
Yeah.
time frame, it was published in the Federal Reserve minutes, and that he explained that gold acted as a thermometer of inflation.
Mm-hmm.
And he said that he was considering having the Treasury sell some of the gold to prevent prices from rising too fast, knowing that a higher price would signal inflation and would influence the behavior of savers and workers and businesses. In other words, the goal was to manage expectations, to suppress gold prices, to control the psychology of the market. Well, that's Alan Greenspan back in the early 90s. But I think gold and silver have been managed for two reasons. And it wasn't just the United States that was involved in managing, although I would argue they were certainly at the head of the class here. This was a cumulative effort by the Western central banks.
Mm-hmm.
And you mentioned GATA, by the way. And before I
Yeah.
go any further, I mentioned this to you offline. Bill Murphy, Chris Powell, and the folks at GATA deserve, everyone who owns an ounce of gold, they deserve all of our gratitude, and
Mm-hmm.
the tireless effort that they made most of my career when selling gold and silver was kind of like selling snow cones to Eskimos. It wasn't an easy thing to do. And they've been there fighting along our side all along. And I want to say thank you to them publicly and think everyone should check them out. But as far as gold and silver, I believe were manipulated or suppressed for two separate reasons. And I think most of this is really past the point of debate.
Yeah.
Question is to what degree do we know of? But let's start with gold. There's something called Gibson's paradox,
Right.
which is the inverse relationship between real interest rates and the price of gold. And I believe that the central banks of the West got together, and you go all the way back to the London gold pool and move forward from there. But they got together and said, look, if we want to play this game of Western currency dominance, of Western bond market dominance. Now, that didn't just mean the dollar. That meant the Swiss franc, the pound, the euro. Before the euro, the Deutsche Mark,
yeah.
right? The Deutsche Mark, the pound, the French franc, the Italian lira. All of these countries were involved in suppressing the paper price of gold. And they would do so that people not only would be inclined to hang on to a currency that if they really understood its value, and we can talk about that too, how everything in dollar value over the last 50 years has gone up, the price of goods, the price of homes, the price of cars, salaries, insurance, everything, right? But
Oil.
you measure it in oil, you measure it in ounces of gold and it's all falling in price, everything, and
Right.
dramatically. And I can show you that in a couple cool explanations. But anyways, the theory was let's suppress the price of the gold, which is the canary in the mine shaft, because especially if we're outsourcing our manufacturing to cheaper places across the globe, Cambodia, China, Vietnam, etc., we have to, we want to accentuate the value of our retirements, of our real estate, and incentivize people to go deeper into debt at low interest rates. I can buy that, that Cadillac Escalade instead of the Chevy Suburban, even though they're made in the same factory. I like that Escalade, and yes, it's $40,000 more. But if I take a 72-month 0% interest loan, well, geez, I can do that. So this is what they did, and they did it by leasing their gold at less than about 0.5% to the commercial banks of the West. And that could have been Deutsche Bank, UBS, Citibank, Bank of America, JP, Goldman, etc. The banks had two expectations, and they were being given, in essence, sovereign immunity from the central bank area, where they basically said, look, take the gold that we give you at 0.5%, dump it on the market, drive down the paper price, right? You take the proceeds of that short sale that you just dumped onto the market and buy treasuries.
Right.
By buying treasuries, you suppress interest rates,
yeah.
right? You make your stock your stock portfolio seem higher, your real estate seems higher. You take the money that you get from the leasing, you buy those treasuries and you keep the spread on the interest on those treasuries versus what you have to pay back on that 0.5% lease rate.
Sure.
Now you get to keep the extra, right? That's yours, free and clear. We're happy because people are taking our Western currencies, the pound and the lira and the dollar and the Deutsche Mark, and they're using it to run commerce and then borrowing it to go deeper into debt to make the economy, give this illusion of prosperity.
Right.
And the cumulative effort of dumping metal onto the market continuously and keeping the public at bay that this isn't an asset you want because these currencies are strong, right? Illusion. It was guaranteed to where they could cover those short positions down the road and make money on the short while keeping the interest spread between the 0.5% lease rate and the whatever between 3 and 8 or 9% interest rate on the treasuries. Everyone was happy, right? The central banks were happy, the commercial banks were happy, the consumer was happy, their asset prices were going higher, et cetera. And then we had 9/11, we had Afghanistan, and things began to change. And then over the last 15 years and more so recently through weaponization of the treasury market, through coercion and sanctions and tariffs pretending to be tariffs that are actually sanctions, and all of the stupidity that we saw over the last several years of wokeness, of meritocracy being thrown out the window for lifestyle, of election perception, of election interference, perception of two-tier justice, perception of immigration issues. And perception is an open, that's an open debate. I'm not
Right.
casting any
Right.
opinion on it, but what I'm saying is the world looked at us at what the hell's happened to that wonderful country who stood on a moral high ground, right? So
Right.
now it's reversing because of delivery. We see entities standing for delivery, which is something no one ever did. And so
Right.
you buy the paper, you stand for delivery, and it is not easy, as Bernie Madoff would have told you before he died, to run a Ponzi scheme when people want their money back. It's easier to
Yeah.
do it when everyone rolls forward the paper and it's a paper illusion. Now that's gold. Gold,
Yeah.
in essence, was done to keep the illusion of strength of Western bond markets and Western currency markets intact, because Gibson's paradox says if you step on interest rates to create this illusion, if you manage the interest rates, if you mess with Mother Nature, that release valve will show up in the price of higher gold, which pays no
Right.
interest, right? They're
Right.
inverse of each other.
Right.
Well, you step on gold, this is what you get right now. Now, as far as silver is concerned, it's different. Silver, I believe, is a function, that suppression is a function of the military-industrial complex. There is massive amounts of silver needed in high-tech weaponry. If you go back to, the 40s, they were publishing silver uses in the military up to 200 million ounces a year in the early 40s. And they used to publish it way up into, I don't know, the 80s or whatever, the Silver Institute or whoever was doing the silver numbers in supply-demand for military. And then it disappeared. Now I have a client who is a consultant at the Department of Defense who was involved in making cruise missiles, who had told me. Now this is debatable. A lot of people say I'm wrong on this. I'm telling you that you go to silverwars.org, they'll validate this. But if you do your own due diligence. I was told this by a consultant at the DoD at the Vancouver Resource Investment Conference that there's between 13 and 14 kilograms of silver in a typical cruise missile. So I don't care how much there is, there's massive amounts. And then you get into ICBMs, you get into F-35s, you get into stealth bombers, you get into all of this high-tech weaponry needs massive amounts of silver. So the military-industrial complex has suppressed the price for a long time. What makes me say that, aside from what I just said? Ask yourself this, Jay, why would 8 Western banks, 8, and that could be Canada, the United States, and Europe, hold the largest concentration, and this for, 30 years, the largest concentrated short position in the history of the COMEX market in the over 1,000 commodities they trade? JP Morgan, many thought would get hit with RICO charges a few years ago. Instead, they got hit with spoofing charges. Their head trader, Michael Nowak, who I had met several times, is in prison for manipulating the metals market. And somehow, by the infinite wisdom of our leaders, they are allowed to be the custodian of the world's largest silver trust still, the largest stockpile of silver in the world, SLV. And they are also co-custodians, along with their friends BlackRock, of GLD. So you have the ultimate fox guarding the henhouse. And for anyone who thinks this is all impossible, I would suggest you write this down. And that is Chris Marcus, Arcadia Economics / Bart Chilton interview, or Andrew Maguire / Bart Chilton interview. He gave 2 interviews, Bart Chilton did. Bart Chilton was the head of the CFTC.
Exactly.
Bart Chilton, who told both of these gentlemen in no uncertain terms that the largest reason Bear Stearns failed was because they had the largest concentrated short position of silver at that point, and silver went from 9 to 21. That he says on these podcasts, they called Jamie Dimon, they being him, Ben Bernanke, and Hank Paulson, who would have been the Treasury Secretary at that time, Bernanke the Fed chair, called Jamie Dimon into their office and said, Jamie, we need you to take Bear Stearns short position. Okay, fellas, he said, I will, but JP Morgan will be in violation of position limits. So they said, fine, we'll give you like 90 days to clear it up, right? Okay, fine, he said. Great, and off he goes. So at the end of the 90 days, Bart Chilton is telling this story. He's the guy that ran the commodity police, right?
Sure.
He says, goes into Hank Paulson's office and says, not only are they in violation of our agreement, they've added to their position, haven't subtracted, but they're in violation of other things like antitrust law. They need to be prosecuted. And he said publicly, I almost fell off my chair. He said, I was told, Bart, back down. It's a political decision. Now, in essence, He admitted this. And now please do not interpret this as causation or some
Yeah.
conspiracy, but he died about 10 days later
Yeah.
after he admitted this on these two shows. Maybe it was a man who knew he was at the end who was clearing his conscience.
Yeah.
I don't know. But I want people to understand it's not debatable that gold and silver have been manipulated. But here's the key. That for all of these years, when the West has ruled the roost through a strong military and the perception of strong currencies and very established markets, liquid markets, etc., they manipulated gold and silver because no one ever challenged them. No one stood for delivery.
Right.
All of these contracts have the ability to stand for delivery. Most of my career, which is now 36 years long, almost every contract, less than 1%, ever stood for delivery. They all rolled forward or cash settled. And
Right.
now the countries in the global south, in particular the BRICS, got the ball rolling in India and Saudi Arabia, very much so, China, Russia. All of them are standing for delivery, and they are valuing these commodities far higher than the currency used to purchase it. What's really different now, Jay, more than anything, is the traders here in New York, whoever the hell they are, and I would argue it's the Exchange Stabilization Fund on behalf of the Treasury, where you don't need congressional approval if it's for national security. By the way, what did silver just get called? Oh yeah, critical mineral for national security. For the past 16 months, they have been importing, whoever they is, every single month, billions and 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 billions of gold and silver into COMEX. And the story that nobody has caught, I've been screaming about it over and over and over again, redundant as hell, but I'm waiting for Jim Cramer or someone on the outside who is supposedly working on behalf of the people of this country as a commentator, a financial commentator, say, you know, yes, we've all noticed that gold and silver have done so well, but can anyone explain to me who the hell is bringing in hundreds of billions of dollars of gold and silver, and to the tune of billions every single month, which never happened? And it's all standing for delivery. Now, standing for delivery doesn't mean it leaves the COMEX. It could be held within the COMEX vaults in a category where those ounces are not for sale.
Okay.
But much of it is leaving the COMEX. What we are seeing in terms of the delivery volume and the delivery repetitiveness and leaving COMEX is 4 feet of snow in Death Valley in July. That is how big of an anomaly it is. And yet no one who considers themselves experts are asking. So when you talk about this grand conspiracy, it ain't. They've held it down for a long time, and they've gotten beat at their own game because the countries originally that started doing this for years were third world.
Right.
China and Russia and India, if not third world, certainly in no place to challenge the West.
Exactly.
And now they're coordinated, motivated, sophisticated, wealthy, and they have been beating us at our own game like jiu-jitsu, where you use your opponent's leverage against them, and that's what they have done. And thank God someone in the Trump administration got to him right at the time he won the election and said, if we don't do this, it's game over. We need to beat them, because under the previous administration and for a very long time, the world, these countries in the southern hemisphere are draining the exchanges of all the world's commodities. We got to beat them. And that's what we see happening right now. As God is my witness, I believe that this administration gets it and they are standing for delivery. And whoever it is, the reason no one's talking about it on the mainstream is because it is the Exchange Stabilization Fund, if I had to guess, doing it on behalf of national security of this country.
Yeah, the Exchange Civilization Act it came in under, maybe it was during Reagan, actually. It was at the 97 crash, perhaps, is when that was established. And
well, you know what? It's a big deal, and I think that, you know, if I'm right, they're doing it because we have fallen way behind the 8 ball in terms of, I think, where. You know, Wayne Gretzky, he never skated to the puck, he skated to where the puck was going. And I think the puck is moving to a world that will be backed by gold as more of a settlement system than U.S. treasuries are. And I just think that that's what's happening. In silver, the realization that it's critical, which was just admitted by the U.S. government, was admitted by European Union 2 years ago. They made it critical. China, everyone focuses on the fact that China is the largest exporter and refiner of silver. They're the second largest producer of it as well. And they came out and said, not only are we going to massively curtail exports, but as the second largest producer in the world, all of our domestic production will stay for domestic priorities. And so I think what you are witnessing is what starts out as a tiptoe quietly, and then maybe a brisk walk. We haven't hit the all-out sprint yet, but the world is. You can see they're prioritizing physical delivery over paper promises in assets that you need to build a digital future, a military, and one that has given trust in a system that's completely lost trust, the fiat world. I believe you will see a marriage between blockchain technology and gold, and that's what a lot of this is about.
Yeah, yeah. And I want to ask you a little bit about that and your recent discussion with Catherine Austin Fitts, too, when we get to that. But I wanted to ask you, do you recall a lawsuit by Reginald Howe
Sure.
in Boston in a federal court?
Sure.
And he was suing the BIS, Federal Reserve, the U.S. Treasury, major bullion banks like J.P. Morgan, Chase, Citicorp, Goldman Sachs, Deutsche Bank, all
I
those.
remember it very well.
And I was actually there at the trial. Didn't
Was
go.
that in New Orleans, the trial?
No, it was in Boston.
Okay.
And I was actually there. No, it was dismissed by the judge, not on the merits of the case at all. Interestingly enough, Reginald told me that Reginald, Harvard-educated lawyer, and the judge was in his class at Harvard. In any event, it was on the basis of jurisdiction or sovereignty and lack of standing. So that was 2000. So 2001 was 9/11, right? So Reginald tried to, and he was very closely aligned with the Gold Antitrust Action Committee. And I think Catherine Austin Fitts was too at one point at that time. Maybe she still is. These were people that were really trying to get the world to see what was going on. And most people just swept it under the rug. It's not a big deal. We're happy. The stock market's going up. We're getting wealthy. Of course, a large percentage of Americans weren't. And we saw the middle class being hollowed out by this offshoring of what I think, wealth-creating industries were being left go and sent over. Ross Perot was right about the giant sucking sound, I think. And so now what you're saying is you can't fool Mother Nature anymore globally.
Right.
And where this is a huge deal. I think people don't recognize it as you do, and you were suggesting that the Bear Stearns thing was really big, that short thing you talked about, the short position. And they had to be, what would have happened if J.P. Morgan hadn't come to the rescue there, Andy?
Yeah, well, what would have happened if the Fed hadn't come into the rescue in 2008 and increased their balance sheet from 800 billion to 9 trillion? That's the thing, is that you can't fool Mother Nature forever. You can come in and manipulate and add variables like J.P. Morgan coming in, but Mother Nature catches you in the end. And what would have happened? The price would have exploded, and you would have taken down some very large institutions, I suppose, the systemic nature of it all. And these commercial banks are all very incestuously tied together. And J.P. Morgan has been at center stage of all of this for a very long time. You have to ask yourself, when you talk about these things, how is it that J.P. Morgan paid a $920 million fine, the largest fine that was ever handed down by the Justice Department at that point, for manipulating the market, but then is still allowed to be the custodian of the world's largest stockpile of silver and one of the largest stockpiles of gold? And I've always felt, there's a fine line between conspiracy and reality. I was talking manipulation standing on the stage in Vancouver at the Agora conference before it became Rick Rules years and years ago, showing how J.P. Morgan, there was a chart that was made by Dimitri Speck, and it showed 10 years worth of market data condensed into one chart. And the price of gold will go like this: at the AM fix in London, straight down, and then it'll come up a little bit at the PM fix, straight down as it hit New York. And then after it hit New York, it would start to go up through Asia and repeat all over again. And I would say this is not how markets work. And I'm not going to mention the name of the gentleman, someone you know very well, someone I know, someone most people watching this know and follow. And he got up on stage after me and kind of humiliated me. He said, "Don't listen to that guy. The traders at J.P. Morgan could never keep their effing mouth shut long enough." He swore right out on the stage, called me out, and said there's no way they could keep their mouth shut long enough. Well, after this lawsuit came about and they did, he called me and said, "I'm sorry, I should never have done that." But I will simply tell you this: there's a fine line between conspiracy and reality, a very, very fine line. And I think we're beginning to see that markets are managed and there are reasons behind it. You know, gold was not held down for some grand conspiracy that I could make this wonderful story about. It was held down to make the Western markets seem stronger than they are,
Right.
period.
Right.
Silver was held down so that the world could be ruled by a strong military. It has nothing to do with price, right? Because when you talk about what silver is in industrial applications, it's inelastic. If there's only, you know, $8 worth of silver in this iPhone, well, if it goes to $17, do you think Apple cares? No,
No.
they don't care, because the iPhone's $1,500. Same thing about a cruise missile. If you have, you know, $30,000 worth of silver in a cruise missile that costs $8 million, do they care? No. It's more about rising price explains how scarce it truly is. And it is depleting in nature, by the way. I know you didn't ask me that, but
Sure.
for 5,000 years, silver was 16-to-1 ratio, silver to gold in Earth's crust. And so was the price. And now it's down to 7-to-1 geologic ratio, because silver is found in a form called epithermal near the surface. Your skin is
Right.
epidermis.
Exactly.
Big deposits were found forever ago. And of the 850 million ounces mined last year, by the way, 1.3 million ounces demanded. But of the 850 million ounces mined, only about 180 million ounces came from companies like First Majestic
Right.
or Silver Standard that mine silver. The rest
Right.
of it, almost 80% of it, came from companies that mine copper, lead, or zinc and stumble across it,
Right.
who have no price incentive to continue to look for silver. They just
That's
happen
right.
to find it. This is a market that the supply is disappearing and is
Right.
disproportionately
Yeah.
coming out of the ground in relation to its demand.
Right.
It's a game that will end badly if you are on the wrong side of a big short position like some of these commercial banks are.
Right. And Andy, I believe also that silver is hard to recover, recycle. I mean, if they're in those missiles or whatever else, right?
Well, if a missile blows up, good luck on doing that.
Yeah.
But
Right.
yeah, I mean, it's uneconomical. In other words, if there is $7 worth of silver in here, how much
Yeah.
are you paying someone an hour to break this thing apart
Right,
and
right.
carefully pull out the little bit of silver? If it were gold, it would make sense, right? If you had an eighth of an ounce of gold in there, sure, it would make sense. That's, you know, at $5,000 an ounce, you're making money paying someone to do that for you, sure. And almost all the gold mined since Genesis is still on the planet, you know, whether it be in the form of bars or jewelry or coins, and you know, it's recycled out of anything industrial.
Well, who's to say, Andy, what the price of silver will go to if it remains such an essential, critical metal? Maybe it's going to go. I mean, Michael Oliver's talking about upwards to what, $300, $500 even. I
Well,
mean,
that's my point at the beginning of this episode. You asked a price discovery. It's never been allowed to find
it's
it.
never been allowed to find. But
We don't know what the true value truly is of silver right now, but when you look how critical it is, how essential it is, and the massive major governments of the world telling you it's critical, and now the U.S. government saying publicly that they are implementing state-sponsored price floors, that would be done to incentivize domestic mining, and a strategic stockpile to which they have burned through all of their silver that the U.S. used to hold. Yeah, it's telling you that silver is far more important than the dollar price would tell you. And you can also see that in China. Right now, there's a $10 spread between the Western price and China, which, you know, incentivizes if a trader from a commercial bank here in the States can buy 20 million ounces and sell it in China, buy the paper here, deliver the physical there in what's called exchange for physical at a $10 per ounce premium, you just made $200 million. Just like that. And they're buying a yacht in Tahiti. Now, people who don't know the market very well say, but Andy, what about the VAT tax that offsets that? No, that's not true. There is a VAT tax. You're right. But that VAT tax is the responsibility of you, the recipient, if I'm sending it to you at the Shanghai Metals Exchange, when it leaves the exchange. If I send it to you and never leaves the exchange, you're not paying a VAT tax. If it leaves the exchange, you are. I'm not. I'm making that 20%. And that's the important thing to keep in mind also. So that arbitrage, which normally is settled by all the money going over there to fill the arbitrage, it's not settling because the Chinese, who are choking on dollars, whose central policy bankers just said, stop taking so much in the way of treasuries and start offloading them.
Right.
They're taking their dollars, they're taking their excess reserves in dollars and treasuries and using it to buy things like gold, like silver, and
Right.
maintain that arbitrage level, just like Ross Perot said. You hear that sucking sound?
Yeah.
The arbitrage, well, that's the exact same, and that's called Triffin's dilemma. But that's the exact same thing you're hearing here. That arbitrage is enticing. Come on, you know you want to make that extra big premium, don't you? Send it to us. Probably never send it back to you,
Yeah.
but go ahead and send it to us, and you too can be rich and have a yacht. And that's, I think, what you see happening right now.
So Andy, we saw this massive flow after Trump was elected, after we talked about tariffs, we saw this massive flow, which you talked about, gold and silver coming to the United States from London. What's that all about? And I'd like to ask you also to maybe talk a little bit about Tom Luongo, who seems to have a theory about what's going on in the bigger picture from a geopolitical point of view. But what do you think caused? I remember you saying on Adam Taggart's show you didn't think it was the tariffs that was triggering the move.
That was the ruse, I think. I
Yeah.
think Trump got together with all the bankers right before he got elected and said, here's what's happening, y'all. You're stupid as a mud wall for having these huge short positions. And by the way, the Economic Times and the Commitment of Traders report has shown that these banks are in the United States are largely net long now. Now, like the Economic Times said, J.P. Morgan flip-flopped, covered a 200 million ounce short position, has been buying massive physical and is net long. And largely the banks in the United States, which for 30 years have been net short, are net long. Now, net long doesn't mean long. It means more long than short. And I would argue some of these massive drop downs we've seen lately that were completely engineered by margin increases and what have you was done to get some of these banks more on sides. However, Luongo's theory is an interesting one, and I don't want to put words in his mouth, but my understanding of it is that he believes that Trump believes that the European aristocrats were involved in the election interference and what was an attempted color revolution through the wokeness and all the things we talked about in an effort to keep Trump out of office. And he's angry about that. And the way to get back at them would be to drain the LBMA and get the U.S. banks quietly on sides. I'll tell you how they would do that in a second. And then watch the systemic carnage that would happen. You mentioned what would have happened if JP. Well, who's going to come to the rescue this time to these banks? Is it going to be the Fed? No. Like the Fed came in and bailed out AIG and bailed out Swiss banks. Who bailed out UBS? We did, because UBS didn't have enough dollars, so we had to open up emergency swap lines for UBS to buy Credit Suisse. So if we don't come to the rescue, what will happen? And this is his theory. This is how he gets back at him. Now, the theory goes like this, gets together with them and says, you guys are idiots. You're going to cover your position, and we're going to start to bring all this metal home because the rest of the world is positioning for a new system, perhaps where the dollar and the treasury are not the world reserve status or preferred vehicles. Anyway, so you're going to start doing that. And what we're going to tell everyone is that it's tariff threats. And because for 50 years, however long they've been doing this, if I'm the U.S. bank and you're the European bank and we're all on the same side to keep rates low so that our economies are great and people are borrowing and we can make tons of money and we can, we have to control the assets, right? So metal would go back and forth between us. And most of the time it was in the form of like a warrant kind of thing where I own it, now you own it, no, I own it, paper, right? Sometimes exchange for physical metal would move back and forth. Sometimes a little bit would stand for delivery. But the volume of us trading with all the 8 banks in the West like this created the illusion of all this volume. And the essence was it would suppress and keep the price from going up too fast, allow it to maybe go up a little bit, but not a lot. Anyways, we were partners in all of this, right? I call you up, I say, listen, dude, this guy's insane. And if we don't do this, we got to just send us back the damn metal. It's only a one-way tariff. Before they get enacted, we need to cover these positions in case something. Don't worry, it'll all flow back. This will all blow over. And they told all their buddies it's tariff, and you can make the arbitrage because there's a much higher paper price here right now, or physical price here, than the paper price in the LBMA. So send us back, make the premium, and we'll send it back like we've always been doing. Don't worry, he's nuts. This will blow over. And I was screaming, this ain't what's going on, y'all. This is reshoring. This is reshoring. And that's exactly what. So at one point, the LBMA last year said, we're a T+1 market. T's trade day plus one settlement on the third day the bars are moving to. Sorry, sorry, it's T plus 8 weeks because the Bank of England is having a hard time sourcing trucks and not enough in the way of manpower to get your metal moved.
Trucks.
They figured it out halfway through. But all of that metal that's been coming, not just from London, but from Switzerland and all Singapore, all of it was coming back to reshore under the guise of tariffs and of arbitrage. So it would have a, now here's where there's speculation. My thought, if Tom is right, it served two purposes. One, get the banks long. Now, what did the Bank of, or the Economic Times say? They're largely long, the banks in the United States. And it would also allow all of that metal to cover the shorts, and then who buys it? Oh, the Exchange Stabilization Fund, because no one's talking about who the hell is doing it. Who's standing for delivery? Where's it going? Billions and billions. Like in December, right? The largest delivery of silver in the history of the COMEX market for the month of December, 65 million ounces. No one asked who the silver was $70 an ounce then or whatever. Who is bringing in $4.5 billion worth of silver in December? But that's every month since a year ago, November, between 40 and 70 billion worth of silver. Every month has been delivered, and I don't know how much gold, between 4 and 5 billion every month. So you cover your shorts on the banks that are stupid enough to have created this existential threat to themselves and to the systemic nature of the system. You cover your shorts, which now the Commitment of Traders Report and the Economic Times have kind of confirmed. Now the guess is the Exchange Stabilization Fund says, shh, we're going to take it from you. Here's your money. Everyone's good. Yeah. And now if Tom is right, right now, as an example, let's just use silver in both instances. Well, by the way, after all that silver has been coming in, it's just a damn coincidence for sure that the U.S. government says it's a critical mineral. We're putting price floors under it and creating a strategic stockpile after 16 straight months of record imports that no one has the balls to talk about in the mainstream. Nobody. I've been screaming it, and it's so obvious. It's right there in front of you. Yeah, you got to dig a little bit of journalistic integrity would go good for the mainstream, but they don't talk about it. Just so happens, it's just like the central banks who in 2017, starting with the Bundesbank, repatriated their gold from the New York Fed and the Bank of England. Give it to us, they said for years, made a big stink about it. But right after, and that was after 6 years of the price of gold falling from 2011 to 17, and right after the Bundesbank made that big stink, the Bank of Austria, Turkey, Hungary, Poland, the Czech National Bank, Bank of Austria, they all said, give us back our gold from the Bank of England and the New York Fed, which gave direct access for 50 years to the COMEX and the LBMA. And they said, we want it back. But then the next year, 2018, those banks bought more gold as a group than they did in the 60 years previously combined. In 2019, they doubled that amount. And then they said, the BIS, the central bank said, oh, by the way, gold's now tier 1 asset. Oh, that's a coincidence. Just like they did here, that the money that knows what's going on, they move before the crowd. Now, I'm going to use, please forgive me for doing this, but I really want the point to go across. Please forgive me for being profane for 1 second. At this level, whoever is bringing in billions and billions and billions and billions and billions every month, they don't fuck around. And they know where the ball is going, or in Gretzky speak, they know where the puck is going. And they're skating to where the puck is going. When everyone else thinks, why the hell would anyone be doing that? And again, don't talk about it because the mainstream does it. They know where this goes. And I think that's all you need to know. So Luongo's theory is that you will get a delivery default. Right now, for example, in silver, for the March contract, which goes off the board in 8 days, is the first day of delivery for March. There is approximately, now this, I haven't looked in 2 days, but approximately, just give me a second. That's not it. There is approximately, I want to say here we go. With 10 days left first delivery, that was yesterday, so 9 days left, there was 58,770 silver contracts that were left open. Now, that works out at 5,000 ounces per contract. That's 294 million ounces. Last week, it was 400 million ounces, still open in March. And So a bunch rolled over to May. May is the next big delivery, not April.
Mm-hmm.
And that's normal. 25% of it already moved into May. They rolled it forward to hedge their
Okay.
position. But that still leaves nearly 300 million ounces open with 9 days left for delivery. Now, the interesting thing is if only half of that stood for delivery, you're talking 150 million ounces. But here's the crazy thing. The registered silver category, which is the metal that's actually available to deliver, is at 90 million ounces.
Oh,
So what do you do if 150 million ounces stand for delivery against a 90 million ounce pool, 90 million ounce
yeah,
pool?
what do you do?
You got a problem. And in London, David Jensen, who we talked about offline, will tell you that they've maintained a 2 billion ounce open position where there's contracts that have been sold that could stand for demand delivery on 2 billion ounces, but there's 140 million ounces of paper behind it. Bars behind it. So 2 billion in paper claims, 140 million. What could possibly go wrong? So what Luongo is saying is if the Western banks knew this in the United States and did the old hoodwink,
Yeah.
they're long, who's short? The banks in Canada and the banks in Europe. Now let's
Europe.
talk about the bank in Canada for 1 minute. TD Bank came out a few weeks ago and said, we
Yes.
think silver's going to 40 and
Yes.
told everybody this. And they're one of the big shorts, right?
Yeah.
And they got stopped out 5 days later at $92 an ounce at a massive loss
Yeah.
because they thought the rhetoric and the position and the openness and the publicizing of it would help drive the price down. It went the opposite
They
way.
didn't understand.
So my guess, if Luongo is right, what he's setting up for is a bank to fail like Bear Stearns did.
Mm-hmm.
And this time you don't see the Federal Reserve come to the rescue, and the systemic chain reaction could drag down a UBS, a Standard Chartered, a Deutsche Bank, and they're all connected together, and bang, they go, fall like a stone. Could it happen? Yeah, maybe.
Yeah.
And
Yeah.
it is what Luongo's theory is to a
Yeah.
degree, I do believe.
Yeah, I think I'm pretty familiar with Luongo, and I think he sees the city of London and the European aristocracy and all these people that have been sort of in charge of the Western world, at least for the last couple of hundred years or so. And so do you see this possibly setting the stage for a reset then, Andy? If we, if there's no Fed there to take care of us anymore, I mean, we're going to have to redo something. There's going to have to be maybe a return to money of integrity or something.
Well, I don't know that we'll see the Fed disappear. Maybe we will, maybe we won't. But I would argue we're moving away from globalism to more of a mercantilism where
Yes,
we
exactly.
take care of us here first. And that has been my theory all along.
Yeah.
That they are trying to reshore manufacturing, and it's not easy to do. And how do you do it? What would you do to make it work? That's a very difficult task, and I've talked a lot about it. I'm the only one either stupid enough to say it publicly or just confident enough to try and say what I believe. I was doing the same thing in 2019 talking about BRICS. Everyone thought I was an idiot. And I have almost 5,000 videos that I've done talking about the BRICS, literally that many. And I was right. Now, I'm not saying I'm right here, but what I am saying is you look at our country. We are 38 trillion in debt. That excludes Medicare, Medicaid, Social Security, government, military pensions. That's 200 million. 200 trillion. A trillion seconds ago was 31,688 years ago. So when a country is that in debt, well, how do you get out? You inflate, you default, or you produce your way out. How are we going to produce our way out? We consume far more than we produce. We offshored manufacturing. That's called Triffin's dilemma.
Yeah.
Triffin's dilemma says that the world reserve currency will always run a trade imbalance because the world needs more dollars than we can provide through trade alone. And over time, this hollows out manufacturing because it becomes much cheaper to send it to Cambodia or Vietnam or whatever. And Vice President Vance has talked about this. It's a privilege we can't afford anymore. So did the knucklehead Jared Bernstein, the previous chief economic advisor for Biden. He wrote a report called Dethrone King Dollar. We can't afford it anymore. We've hollowed out the middle class. So how do you bring it home is the question.
Yeah.
And I think the first step is what we just saw, reshoring.
Yeah.
And I do believe that gold will have a significant role in how they plan on doing it, coupled with the Genius Act and with Judy Shelton's idea. And Judy Shelton, who sadly wasn't the nominee for the Fed, just met with the Treasury Secretary, Bassett, and talked to him about her theory. And she said to me twice on an interview, and once with Michelle McCory, my co-host, in an interview and in her book and all over X that Trump told her no uncertain terms is going to peg the back end of the bond market to gold
Yeah.
July 4th of this year, which is the 250th anniversary of the country.
Yeah.
But there's a lot more involved in that, of course. But, all I can say is that I think there's a lot more than meets the eye as to why gold was brought home to the level that it has been and continues to come into the COMEX market with very little public fanfare.
Yeah, Andy, I know we're short on time here, but I wanted to ask you a little bit about Catherine Austin Fitts. You did an excellent interview with her recently.
Thank you.
And I think you just mentioned some of Trump's policies towards crypto. And you've been pretty positive on Trump, I think, for reasons in terms of his reshoring, and not just with gold and precious metals. Other policies are aimed at getting America back to, doing things that really create wealth instead of just consuming, but also producing. And so I'm wondering, but Catherine Austin Fitts said something to you that was a little surprising. She said, Trump is not our friend.
Yeah.
Do you know what that was in? I'm trying to remember exactly.
So she basically
in terms
said to me that he was selected to usher in the digital surveillance state and to convince the folks on the right that it was necessary, starting with the implementation. The idea was to show everyone what election interference could look like by allowing all of these people to claim it's okay to vote without an ID. And the funny thing is, the same people that bitch about election interference from offshore are the same ones saying you don't need an ID to vote.
Right.
I mean, it's just so stupid. You need an ID to buy a pack of cigarettes or to see an R-rated movie, but you don't need one to vote. The stupidity is so off the charts, it's not even funny. And maybe that's what was done intentionally, the PSYOP, the false flag, show you what it can look like, and then say, by the way, in order for election integrity, we need the digital ID. Well, the digital ID, if you look at the original digital ID, that there are patents on it by Bill Gates and the Gates Foundation and Visa, and how this works. And the idea is that it is the foray into the digital surveillance state when you add into it the Genius Act, which went into effect, which is a large part of my theory about how you devalue the dollar and bring back manufacturing. But what it is you will never write out a check again, and you will never send a wire again. It is digital money on a blockchain backed by short-term treasuries. But whoever issues these stable coins, whether it be USA, Tether, or Visa, or MasterCard, whoever issues them, all of it ultimately run through the plumbing of the Treasury, in and out through the U.S. Treasury. So in essence, she was saying, it's almost worse than a central bank digital currency. Yeah. It's a central bank digital currency hiding in stablecoin clothes, because even though the central bank isn't issuing it, the Treasury is seeing everything go in and come out. And in the act, it doesn't say that they are not programmable. What they already are is they have KYT, know your transaction, KYC, know your client, and AML, anti-money laundering technology built into the software. So they'll know who you are, where you got your money, and what you're buying. Now, if it's programmable, which it doesn't say it's not, they haven't put any verbiage in there. Well, you didn't get your vaccine and you're out pumping gas, the authorities will be called, and your credit card, which is inside the pump, is now locked and you cannot retrieve that until the authorities come, or whatever. Yeah. Now, that's just being kind of grandiose, but that's in essence what she was talking about, that he was selected to let the people on the right who would never vote for that, supposedly,
correct,
to be okay with the digital ID, and quietly, under the guise of election interference or election integrity, start to tiptoe into this digital surveillance.
Right. Well, I would like to think there's quite a few people in the administration that would be opposed to that, and I hope she's wrong about that, because we have friends that live in China. Well, they live here now, but they go back to China from time to time, and we know what it's like in China. If you oppose the government, or you do something, or you, just like you're saying, if you don't get vaccinated, or you don't do this, or you do this and you're not supposed to, they just lock you down.
Yeah, well, look what they're doing in supposedly this Western entity called Great Britain, right?
Oh yeah,
And you say something wrong on Twitter and they throw your ass in jail.
right.
It's like what's happening to this world that we live in, and it's
Well,
it's it's sad and scary. But you have to. I'd rather be aware and alert and open, have my eyes open,
yeah,
so you can sidestep what's rolling at you instead of getting rolled by it. And
right.
and that's to me what
That's the
Catherine,
idea. And so I think one of the things that Catherine Austin Fitts was suggesting, uh, cash, gold, silver. I mean, analog, not not crypto, right?
Yeah, well,
Enjoy
I
it
had three kids and they're all out of the house now. My youngest is at college, but
uh-huh.
she would come home and say, "Can I have some money, Dad?" And I'd give her $50. She's like, "No, I want an Apple Pay." I'm like, "I'm going to take this $50 is disappearing in 3, 2." It's like try to let people, and the kids nowadays don't like cash. No one pays with cash. I am all cash as much as possible, and I think the old saying, you don't know how much you miss something or someone till it or they are gone. Well, that
Yeah,
would be the same thing about cash. I
yeah,
just got back from a ski trip in Vail. When I was every time I'm up in Vancouver for the VRIC conference, Jay Martin's conference, which
yeah.
I wouldn't miss, um, I go ski at Whistler with some friends from the Royal
Sure.
Canadian Mint. Whistler's owned by Vail. Vail owns ski resorts all around
Oh,
North
really?
America, and they are a 100% cashless company, one of the biggest companies in North America. And so you go to a Vail or Whistler with nothing but cash in your pocket, you won't ski and you'll starve. But
Huh.
that's how things are moving slowly,
Yeah.
slowly.
Hmm.
And it's moving down, becoming more ingrained with the young folk who Apple Pay, Venmo, Zelle, double click your phone and use your Amex on your phone. No one carries cash. So
Yeah. They
that's
don't
what
under,
she's saying, that it's slowly
they don't
happening.
understand, Andy, the disc. They don't understand what kind of a world this will be if they can shut you down every time you have an idea. And it could run both ways. I mean, it doesn't matter which side of the political spectrum you're in.
No, you and I have gray hair. What the hell do we know? It's like we're just old guys who, living in the past. But,
Yeah. Well,
and
I'll tell
that's the
you.
thing. There's that transition where they come around and say, "Shit, Dad was right.
Yeah.
Why didn't
Well,
I listen to him?" Well, I
yeah.
got there with one of my three kids so far, so we'll see
Yeah.
where the other two end up.
Well, you and I were there at one time too, and there was a time when I thought I knew better than my father, but about that same time was Dr. Peyton Yoder's thesis that if you debase your currency, the nation will go downhill, and
Yeah,
certainly has proven to be true. The work ethic of somehow people think that they can have what they want without working for it. Who's going to supply the things you want? I
the
don't.
casino.
Yeah, the casino. Yeah, Andy, thank you so much for your time.
I
It's
enjoyed it. Love to pick up
very.
where we left off. There's lots more to talk about.
Oh, I know. I've got notes here. I had, but we've spent almost an hour already.
I would be happy to do a part B with you, Jay,
Would you?
whenever there is time and pick up
Okay.
where we left off
I
because there's a
thank you
lot
very
more I
much,
want to
Andy.
talk
That's
to you
very,
about. You're a
very.
gentleman. Thank you for what you've done for the industry for the years. Thank you for having me on, and please let's do it again and pick up where we left
Well,
off.
thank you so much. Well, that's very kind of you, Andy, and I'll take you up on that. Folks,
Look forward
that's
to it,
it
my
for
man.
this show. Probably be gone next week because I'm going to Toronto, the Metals Investor Forum, the PDAC. Probably won't be anything next week, but keep your eye on your inbox for messages from Substack. Until we meet again, goodbye and God's blessings to you.